Good evening, everybody. All right, as you can see, there's bottoming action been going on in the Dow here for the last few weeks. It was indecisive until yesterday when you had that little Doji gap up kind of taking you out of this trading range, which now implies next target is likely going to be up here to the 50-day moving average. So that might be a 2 or 3 day stint to get there, but it also allows us to anticipate 2 or 3 days of an uptrending market. Same scenario here on the S&P 500. You can see how the trend was kind of broken here, and how did they break it? With a best friend gap up, not only through the 50, but also through this downtrending channel. So this is the reason this becomes an important element, because so many people say, well, shoot, should we be chasing after something? And the answer is, if you know what the signal or pattern is telling you, you're not chasing, you're just getting confirmation of what the trend should be doing. So we can see here on the NASDAQ that this little morning star signal, is given the prospects that kind of breaking down or out through this level, that bullish sentiment has come into this market. Now, why bullish sentiment has come into this market, that's what we don't have to figure out. We think with interest rates, Russia, China situation, all the things out there that would not be very conducive for a bullish market, yet they are still buying the market. So there must be something out there that we don't see right on the surface. And it might be that the U.S. stock markets might be a haven for safety. What do we got? And that same scenario can be kind of enhanced by the fact that look what gold prices have done. They've just skyrocketed over the last 3-4 weeks. And that usually is an indication that when people are getting fearful, they're trying to put their money in safety places. With gold being one of those. So when we saw the double bottom, that allowed us to start taking advantage of some of these strong price moves in gold stocks. So end of month and end of quarter is usually bullish. Yeah, I don't ever put a whole lot of weight into usually. I put more weight into what are the markets actually telling us and which sectors are showing us the best and you can see crude oil is coming back up pretty much close to where the support level is or was. Now I have to see if that's going to break through what would be now considered a resistance level. All right, so with the market kind of in a bullish mode, that allows us to take advantage of the big price moves, meaning the breakout moves. And again, this is what offsets that fear factor of, boy, I don't want to be chasing something. If we know what the signals and patterns are telling us, like a bullish flutter kicker breaking out through this level, the moving averages are, the blue line is the 50-day simple moving average. The red one is the 200-day simple moving average. This is what every major money manager around the world uses to make their decisions about their portfolio. The T line is the most prolific indicator of human nature. It acts like a natural support and resistance level of human nature. And I also have the 34 EMA on here that works reasonably well. So what we want to be able to identify is which sectors are getting the attention. Or the other way around is, if a sector is getting attention, is it getting bullish attention? So there's been a lot of rhetoric here recently about artificial intelligence. Musk was saying it could be dangerous, but I'm kind of trying to figure out how artificial intelligence can be dangerous if it's basically taking information that's already available and now putting it into a format that can assess all that information much faster and probably much more accurately than a human. Anyways, I won't get the little green candle is the 3 EMA. It works in conjunction with the T line. Steve, that's just, I guess, like anything else. You have to be aware of that fact. And I'm sure as time goes on, it will be more fine-tuned or better clarified. Okay, so here is the reason why identifying breakout patterns means something. One, it's telling you there's a brand new, powerful investor sentiment coming into a price move. That could be too. So what does this tell you? Did you miss this move? No, not necessarily. This was the move that told you something new was coming into that price movement. So what we want to be looking for is the patterns that tell us who's in control, the bulls or the bears. And when we can see kind of classic patterns like an OTEX, you definitely want to stay long on a chart like that. So I'm just going to kind of run down here through some of that we've recommended based upon observe the obvious. Look at your morning star signal right smack dab on the support level of the 50-day moving average. Now that immediately informs us that this is where they've decided to start buying. And then when they start gapping it up, not only did they tell you when they were starting to buy, but they told you that there's going to be a strong force in that next buy move, which means there's two targets. One, first target right here, and two, maybe all the way up in this range. But what is the bottom line to all these breakout patterns? They're putting you in situations where the probabilities are greatly in your favor that you're going to be in the right direction at the right time. So you can see the fry pan bottom on APPS. Now this is all part of the process of what should we be doing if we were going to buy it today. Well, as you can see, when they opened it, they immediately started trading lower. Well, the buyers aren't there. The buyers aren't there. Buyers aren't there. Now, do we get rid of this? Not really, because you can still see the fry pan bottom with the dimple at the halfway point. So what is the strategy at this point? If they open this positive and start trading positive, we know where our next likely target's going to be, right here. And then what do we want to see once it gets to that level? Bah. Well, well, well. Want to see where the fry pan bottom breakout is occurring, and it usually occurs at levels where everybody else is watching. Self-aware AI with quantum computing, worse than Terminator. For now, we can stick to signals and patterns. That's true, but remember, we're looking at an industry that people say, now beware of. However, there are plenty of corporations around the world, especially here in the United States anyways, where they're taking that information and not trying to make it worse for everybody. They're dramatically trying to improve their own profitable endeavors. So they're not out there trying to find stuff that is bad. And this is not so much a cup and handle as it is a fry pan bottom breakout. Do you buy prior to earnings? It depends on what the chart looks like. So look at your best friend breakout on SCPH. And this is what we kind of constantly train, that if you see something like this, what is our expectation after a big breakout move? A 45 degree, which means it's usually a nice steady eddy to the upside. Let's see, we did the golds. So this is what we want to teach ourselves. If you see a big gap up best friend, a lot of people say, shoot, Saki, are you in here? Should I wait for it to pull back so I can get into it? And that's not the right trading strategy. If you see a powerful move in bullish sentiment, what do you want to see after that signal? Continued bullish sentiment. If they've got enough strength to pull it back to where you might want to get in or somebody wants to get in at a better price, that's not telling you there's very strong bullish sentiment in that chart. You probably don't want to be in it in the first place. Or that's what the charts will tell you. Sometimes it's the next day. Sometimes it's a week. And I've got other charts that we'll be looking at to kind of illustrate that point. So here's another one, Oscar. That best friend signal immediately tells you there's a brand new powerful indication or investor sentiment in that. For whatever reason, it could have been earnings, it could have been a major contract, it could have been one of their products approved by the FDA. It doesn't matter what it is. The fact that we can see immediately what that reaction is allows us to make much more concise entry strategies. So if this had moved up all day long and then closed back down here, what do you think was happening? Strong price move, profit taking. Now, if the next day it opened lower and started trading lower, that meant there wasn't very much bullish sentiment. But if they open it and start trading positive, what's that kind of tell us? This profit taking is over. This best friend signal is confirming. So that's, I keep pointing this out because that is how we identify whether a signal is working or not working. What is it doing after the signal? All right, let me jump to, got a couple of shorts that we're working today. As you can see on EVA, got a bearish J-hook pattern in progress. And so now at least you have a trading strategy. If you're short or if you're going short, where would this bearish J-hook pattern confirm? If it started selling off through this level. But the other side of that coin is, let me make this bigger. It came down here and then did a hammer and closed in this range. Now what should we suspect? A double bottom versus a J-hook. So not only does a pattern setup alert you as to what would be a good trade setup, what should the expected results be, and if it's not working, we can see immediately what type of signals. Michael, I guess the rhetorical question is, where, I'm glad you pointed this out because this is the type of question we get. Is this the place to be buying this stock? What do we know about human nature? Human nature says if it's a strong buy in the oversold area, what's that telling you? The bulls are trying to get in with great enthusiasm. Where do most people buy? They buy exuberantly at the top. How do we identify exuberance at the top? They start gapping it up and they start moving away from the T-line in the overbought area. So the answer would be no. Travis asked you the right question. Where should you have been buying? And the answer is, should have been buying here or buying here on the bobble breakout. Now what should you be doing? You should be watching to take profits. Did you say something for me to listen? Did you call my name up? Cynthia, I don't think I did. Yeah, this is where you would be getting ready to sell this stock. All right, so I'm glad you asked that question. Because if they're gapping up in the oversold area, it means it's time to buy. If they're gapping up in the overbought area, it's time to take profits. If they're gapping down in the oversold area, start looking to cover short positions and going long. We will do a session on gaps here pretty soon. I've done that, and gaps are kind of very revealing as far as what's going on in investor sentiment, especially when coordinated with or correlated with candlestick signals and patterns. But most people don't take a lot of interest in it. It's an extremely good, powerful method of trading is candlestick signals with gaps. So you can see on GTLB what type of pattern this was. Gap down, profit taking, or covering short position. But when people say, should we be buying here, what is the usual answer? If you're buying, you want to see what they do when they get to the T-line. Now you can see what they did when they got to the T-line. A bearish engulfing, bearish Doji sandwich, and now looking like it's setting up for a bearish J-hook pattern. So what's our assessment on this one? We want to watch to see if they can bring it back to this level. And when they do, are they supporting here or are they going into wave 3? All right, on the biggies, we recommended Netflix today if it opened positive, because look at your pattern. There's your bobble breakout. And what do we know about a bobble breakout? Basically, it's a J-hook pattern that has an identifiable resistance level. And why is that important to us? Because everybody else is watching what it's going to do here at the 50. What are most investors taught to do? You don't buy something else that closes above the 50, which doesn't mean a hill of beans when it comes to candlestick analysis. But we also know that when they sell up here and do our little J-hook pattern, we know that we have a much stronger buy opportunity, because if it trades back up above the 50, everybody and their brother who's watching the 50, the 200, or whatever moving averages is saying, "Oh, I can buy because it's closing up above the resistance level." The T-line, very confirming indicator. Look at your little morning star signal in NVIDIA. Just a nice steady uptrend. This kind of takes the anxiety out of, oh, should I be selling, taking profits? Well, if you stick with a very simple trading rule that as long as you don't see a sell signal and a close below the T-line, you stay long. Apple, same scenario. As long as you don't close below the T-line, again, look at that little morning star signal, J-hook, positive trading. The implication is there's still more upside in Apple. Now, whether that is a major trade, for example, on Amazon, we can see the morning star signal right off the 50. Where do you think the next target's going to be? Up here at the 200, with a high degree of probability. But even if you don't like trading Amazon because it's too expensive or you just don't like trading it, it's an indicator that if they're buying Amazon and they're buying Apple and they're buying Tesla, what's that tell you about the general investor sentiment of the market? Telling you the speculators, the people that are trading the trading stocks are buying, so they're not real concerned about bearish sentiment. So here's Tesla, and we can see where Tesla is having a problem. Right there. And this is why knowing the nature of a specific candlestick signal, like the Doji, gives you a much more clear insight as to what the trend might do. Remember, the Doji rule says the price will usually move in the direction of how they open after a Doji. So if they open this lower tomorrow, whether it's the stock itself or the whole market, what's that telling us? They're having a hard time going through this level. On the other hand, if they open a positive, what's it telling us? The Doji rule says they're going to trade positive, which tells us they're breaking out through this level. Okay, so anytime we can see things that have strong buy signals. ADI, look where it bounced, right smack dab off the 50. Doing a morning star signal with a best friend gap up on this side, close above the T-line, and then followed by a gap up again, kind of taking you out of this range. So what does that imply? Told you when they moved it sideways, came back, found that they were going to support the 50. Now they're coming back with a great enthusiasm. Those are the type you can say, all right, maybe I do a spread up here somewhere, make a much higher probability trade without having too much exposure to market risk. This is what we're looking for. That information, looking for this type of configuration, or kind of your 45 degree. That's on CPR CRBP. So here's one. Somebody was asking, how long do you wait to after the a big announcement or something positive? Well, as you can see, it didn't confirm the next day. Didn't confirm the next day. Well, what was the indicator that told us after this big new change of investor sentiment, what was happening? Well, as soon as they got back to the T-line, now look what's happening. It's starting to move up. So why is it starting to move up? Because this signal right here told us there was a brand new investor sentiment coming into this stock. On the stochastics chart, is it better buy when the blue line? No, we're not buying stochastics. It is best to buy when the signals tell you when it's time to buy. Everything else is just a confirming indicator. We're not using stochastics to make our decision. We're making the signals. We're using the signals to make our decision. So there's your best friend, Breakout. Now, for years, I would look at this and say, oh man, this has probably already gotten away. But now, I can look at it and say, if this opens positive tomorrow, what do I got going on? Your best friend, Breakout, Doji sandwich, telling you the bulls are still in control of this one, giving you a much higher probability that you're in the right trade at the right time. And here's why you want to know the different patterns. You've got a J-hook pattern that looks like a J-hook. You've got a J-hook plus, which is a J-hook that shows that it broke through the resistance level, came right back to the resistance level to see what was going to act as support, and started back up. Now remember what the information is built into this pattern. Investor sentiment was very strong, and then there was profit taking. We can see exactly what the investor sentiment was when it came back to test the 50. Indecisive doji, and then what did it tell us? They weren't going to come back and go back through the 50. Everybody saw that. Now that's where wave 3. Got wave 1, wave 2, wave 3. Just an additionally high probability trade setup. Micron, kind of that same scenario. Came up through the resistance level. Look at our hammer signal, right smack dab at the 50 and the T-line, trading positive. What can we expect from Micron? More than likely, we're in wave 3. Now, I also pointed out kind of that same situation setting up on AMD. Now, what's the difference between a J-hook and a J-hook plus? Well, J-hook plus is doing it at a level that everybody else is watching, whereas the J-hook might be using our indicator, the T-line. But why is our indicator less revealing to everybody else? Because nobody has the T-line on their charts. Now, could you be buying this tomorrow on positive trading? Definitely, because what would be your pattern setup? There's your classic pattern, fry pan bottom, strong price move. What's your prerequisite for a J-hook pattern? A strong price move. So you get ready to buy wave 3. So everything that we identify on a candlestick chart is based upon what normally happens in human nature or investor sentiment time after time. This is what we expect coming out of a fry pan bottom, a strong price move. This is what we expect for a J-hook pattern, that strong prerequisite of a price move. EMAN, fry pan bottom, And notice where they pulled this back to. Right back to a level that nobody has on their chart. The reason it becomes so effective for us is we've discovered that this 8 exponential moving average acts like a natural support and resistance level of human nature. This is what dramatically not only improves your profitability, but your visual analysis of which patterns are starting to set up based upon the fact that statistically, if they can't close below the T-line, that means the bulls are still in control. Boy, I got a bunch here, don't I? This is what we're looking for. And I say what we're looking for is because I hear so many people say, well, shoot, it's broken out. Has it already left the barn? No, it's telling you there's a new investor sentiment coming into play at this point. F, L, and C. Does it look real dynamic? Not yet, but look what our signal's telling us. Our best friend signal tells us we can be buying on positive trading. So now we at least have a game plan that if we're buying on positive trading, what's our next visual assessment? It hits the 50, what is it going to do at that level? NAAS broke out. Again, I want to point this out as just clarity that if you're seeing indecisive trading and then this move, what is stochastics? Is that a question of what are they or what are my stochastics? My stochastics are 1233, slow stochastics. Now, stochastics are a process or a an indicator that utilizes the high-low open close to tell you which direction stochastic is going. So there's very common sense put into candlestick analysis. The Japanese rice traders say if you see a candlestick buy signal in the oversold area, that means there's probably a reversal. If you see a candlestick sell signal in the overbought area, there's probably a bearish reversal. If you see a candlestick buy signal in the overbought area, it doesn't mean anything. Or if you see a candlestick sell signal in the oversold area, it doesn't mean anything. You want to see where the signals are setting up at the appropriate spots in a price move. So you got VERX, I said that right, best friend, and didn't really confirm. But where do you start watching? You start watching to see what they do once it's back here on the T-line, because what did this tell us? Again, there's a new alert that something new is happening in the stock price move. This was a little bit more clear on. You can see the basing. You can see kind of the Morningstar signal, bullish confirmation. Then it opens and really, so if you were getting ready to buy on this day because you scanned and found this, what's our strategy for the next day? We want to be buying on strength. Well, we can see that they opened, really didn't move and started selling off. But what did this all tell us? There's now a new, what are the parameters of stochastics? Rob, I don't know what you're asking. There's slow stochastics 1233. Okay, thank you, Deborah. So here is an important aspect of human nature. Opens here, closes here. That doesn't look real good. We had some buy signals. If they are trading back above this level, what's that tell you? This day of profit taking is over. The strength of the signal is still in progress. So that's why You want to know what the trend kicker signals look like, which is what this basically is. Now we also got sectors like the lithium sectors. They're starting to pick up some steam. PLL. Now LHTM is a little bit laggardly, but you can see what's happening. They're starting to buy these stocks again. LAC, same scenario. And ATLX also. Notice what happens when they have these initial big moves. If you see a sell signal, in this case a big, huge bearish harami, this enthusiasm is now met with bullish and bearish fighting, and it'll go flat for a while. Now what you want to see is, when is that sentiment that was over here starting to build back up? And as you can see, this one's like it's got the bullish sentiment starting to come in. Oh yes, SGML. This is the one that was rumored to be being bought out by Tesla, just so that they would have a constant supply of lithium. And then the other one, was it ALB? Also starting to come up. Now, which one of these are the best? Well, that's where you have the opportunity to go back and say, all right, which one of these look the strongest as far as percentage return? But the confirming indicator is, if they're buying all the stocks in a sector, that means they've got confidence in that sector across the board. So you're not looking at just one renegade aberration of a stock that's moving in a sector. You're putting all the stars in alignment by saying, all right, if they're buying this sector, which stocks in that sector are the best ones to go after? All right, we did those. KOD, Doji, bullish confirmation, Doji. Now, what's already been illustrated on this chart? There's a brand new strong investor sentiment. So even if you're a day trader, and I shouldn't say it that way, if you're a day trader, if this opens positive, we know the Doji rule says it's going to trade positive, and we know the Doji sandwich could have the same magnitude move here as on this day right here. So not only do the signals tell you when it's time to be buying, but it also shows you setups that you can do a lot of day trading based upon knowing what a pattern setup looks like. Well, shucks, I can't even read my own handwriting. So here is another example of, does every bullish trade perform, or what should you do based upon how it performs? Well, if I saw this and I think, oh boy, this is breaking out, I'm buying, and then I start seeing it sell off, how do we know when to take profits on a big price move like this? Obviously, you go to your 10-minute chart. So they took it up pretty quick, and then they started selling it off. And what is our T-line rule? The further away you move from the T-line, the higher the probability they're going to come back and test it. So blasted it off, and now it's not worth anything. Now, I used to look at these years ago, say, oh man, there's something big going on, and it's pulling back. I'm going to get ready to buy as soon as I see them starting to come back in. Well, I've discovered through the years they usually don't come back in. So you don't even trade this until you see let's see, I don't even know what chart I'm on right now. Oh, this was the 10-minute chart. How did I get to the 10? Oh, that's the 15-minute chart. That's what's happening. So here's that spike up, here's that indecision. Where would you have stopped out if you were trading this? Right there. Because if this is going positive, it should be going positive. If it comes back through this level after a day of indecision, or a time frame of indecision, where do you think the next target's going to be? Right back down here. So this is all just high probability statistical results of what human nature does time after time. So if you were buying this, and I know some people will have done this because I did it many times myself. I'm up here, or I bought here because it looks like it, well, boy, no, I'm going to hang on, I'm going to hang on, I'm going to hang on. So there's something there. What I've soon discovered is if they're closing back below the T-line, remember what our T-line statistical result is. If they're closing back below the T-line, the bulls aren't there anymore. Close out the trade. So once we see, oh, pshaw. I don't know why this chart does that. Let me see if I can find it over here. You can see Toro was trading at around the 25-30 range, came down here, bottomed out at the $1.50 area after just 30 days. But what is the what is the indication right here? Well, we're back up above the T-line with some buying. Now, is this a very good chart to be trading? Well, it's got two elements to it. You can see after a series of dojis, they've started to take it back up. But if they're taking it back up, what is the rate of return? Shoot, you could be up 100%, 200%, 400%, fill in the gap. So not only does it have a good chart, but if you're an aggressive trader, you want to see where the buy-in's coming back in and what the magnitude of the move could be. So there's going to be a lot of times where you see a chart that has good upside chart, but you may only make 6% on it if you got into it. There's going to be other charts when you get into it, you might make 600%. We're looking for those. I like the, well, the 3 white and black is not a high frequency trade. That's why we've narrowed it down to the 12 major signals, because they're the ones that are going to occur quite often, meaning almost every single day. So why is Intel as slow and sluggish as it is a good chart right now? Because not only do you have a J-hook that bounced straight off the 50 back up to the 200, but now you've got a bobble breakout. And what does a bobble breakout mean? So when it came back up through the 200, everybody who's watching it saying, well, it's up through the 200, now I can start buying. We can see the pattern setting up. Okay, let's see. Toro. Dang. Oh, I'm on the wrong charts. That's what's happening. So this, the reason we call this your best friend is two major factors. One, it's telling you you got a high probability of the direction of the next move. And two, you've got a high probability it's going to be a strong price move. So this is why we've, oh, that's probably what I should be mentioning. I think in late April, we were going to be doing a full-day training on the top-ranked signals and patterns. Now, you all know we got the 12 major signals. You don't have to learn all 50 or 60 candlestick signals. The 12 major signals are the ones that are occur quite often. we've got 6 or 8 candlestick patterns. But we've got a combination of maybe 15 to 18 what we call the top rank signals and patterns. That is signals that are in conjunction with a pattern or a big move. So we rank the best friend signal as number 1. It's not because it's number 15 or number 18 is bad. We're just kind of quantifying them as far as these are good signals and patterns. So once you start deciding, all right, I can't learn all these signals and patterns, but let me pick out 4 or 5 that I can become an expert at, and let me find the best ones. So here's Western Digital, kind of a Morningstar gap up. What's that tell us about our downtrend? The fact that they closed above the T-line tells you the probabilities are now much stronger that we're heading up, and where would we think the next targets are? Right here at the moving averages. Now, it's not difficult to assess what everybody else would be looking at. Fry pan bottom on GMed. And how did this start up today? Look at your best friend gap up. Where do you think your first target is? Play right in there. Where do you think your next target is? Up here. Now, if you become accustomed to the high probability pattern setups, now what you've got the opportunity to do is say, well, maybe I do a spread up here. That if I've only got 46 or 45 cents into a spread, that if I bought the 57.50 and sold the 59.50, that if it comes up through that level, my 45 cents now turns into $2. Good rate of return. And you don't have a whole lot of money exposed to make that trade. Oh, I did those already. So just as strong on the bullish side as patterns on the bearish side, because what is this telling us? Telling us they want to get out of this trade with great enthusiasm or great, hold on, contact lens slip for crying out loud. It's telling you they're trying to get out of this with great enthusiasm. This usually implies there's going to be more downside. Hold on, contact got out. Here's another one. So you can see what's happening here. There's that slow curve, best friend gap down. That's got more downside. Oops, hold on. Let me put this contact right back in. I'm here, just having to put these darn lenses back in. Okay. So why is this important? Because you can see that the investor sentiment was turning bearish, and these slams give you big price moves. Kind of that same scenario here on First Republic when all the banks were getting killed. Huge profits to the downside. All right, so what gives you the advantage, or what gives you an advantage of what trades to put on based upon your scan results from the night before? Well, if we wake up in the morning and it looks like they're opening the market up another 70, 80, 90 points, yep, they're still buying. We can buy much more aggressively on a chart setup that's now telling us there's confirmation. So we've been buying the artificial intelligence stocks. You can see where the trend channel was or is. And you can see at the bottom of that trend channel with stochastics in the oversold area, a morning star signal didn't confirm, then it confirmed. That told us the bulls were in control. So you can always kind of, I say always, there's times where you can look at a chart and say, all right, they're selling. And how did you know they were selling? Because they could never close above the T-line until today. Now, what did that just do to the probability factor of this trade setup? If they open this positive, that means they've broken this downtrending T-line resistance level, and now the probabilities are pretty strong it's heading higher. Where would you think it could head to? Well, there's one target, there's two targets. What else would everybody be looking at? People always ask, do you use Bollinger Bands? Do you use Fibonacci retracement? You can use whatever you want to, because we're not using them to make our decisions. We're using them to find out what everybody else's decisions are. So where do you think, yeah, your stochastics coming out of the oversold heading up. So are we using these as targets? Not as specific targets, but if it came up here and did a shooting star failure rate at this one, well, that would tell us, well, the people that were trading Fibonacci were starting to take profits at the 38. Maybe you want to take some profits. If it goes through, and we watch to see what everybody else is watching. Okay, let's see if I can get rid of this. Oh. Okay. So if you want to put things like Bollinger Bands, a few years back we had John Bollinger on a couple of times, and he would be the first one to tell you that Bollinger Bands don't tell you when to buy and sell, it just tells you what type of range you're in. So the reason these charts are relatively clean or uncluttered is for one simple fact. The most important element of a candlestick chart are the signals themselves. Everything else is just a confirming indicator. So look at the patterns that you can recognize. This is what we call blue ice failure, where somebody fell through the ice. What do? They try to come up and find the hole they fell through. If they can't find it, they drown. Where do they go? To the bottom of the pond or whatever they fell in. So everything has a pattern because human nature works the same way time after time. Okay. Are there any general questions on candlestick analysis? The reason they work so well is because human nature works the same way time after time. And this is coming from somebody that was the worst investor in the world before candlesticks came along. And finally discovered that all it is just common sense investment perspective put into a graphic depiction. Okay, I guess with that, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. Denelli, stay short. For two reasons. You can observe what direction it's going, and you can see that every time it kind of hovers here at the T line, they can't get it above that level. Nuva, that one you can buy. Look at the Doji sandwich, best friend gap up. Where's your first likely target? Back up to the 50-day moving average. Adobe, just stay long. How did this one start? With your gap up, double bottom. And how long do you hold on to this? As long as it stays above the T line. Amazon held up at the T line, or I'm sorry, at the 50. Where do you think everybody that's watching Amazon is thinking the next target's going to be? Right up here. C Limited came up, consolidated, right back to the T line. Now, why do we have this 45 degree? Because this told you there was a brand new spark in this stock. Whoops, that's not what I wanted to do. That's not what I wanted to do. 20-year notes, wouldn't be long or short these. It's just moving sideways. And the stocks stay long. You can see the Morningstar signal. Now you're right pretty much here at the breakout area. They open this positive, they're still taking it higher, which means the semiconductors are still working. IoT, you can be buying this one. Looks like next wave is now starting up. And this is a case where, look how it bounced off of 34. Crocs, you can buy this one on positive trading after today's little gap up. Oracle, stay long. Just make sure they get out through this level. If I was long, I'd have a safety stop at today's low. And Home Depot, nothing wildly exciting. I wouldn't be long or short this one. It's just not enough price movement to it. When they are in progress, say on a 5-minute chart, and of course one cannot see what is on the right. When they are in progress, author, I'm having a hard time understanding what the question is. Yep, can't find. When they are in progress, say on a 5-minute chart, and of course one cannot see what is on the right. Arthur, I don't know I don't know what you're referring to. XRES. This one you could get ready to buy on positive trading, obviously a bobble breakout. EVGO, another one you get ready to buy on positive trading as long as it stays above the 200. AMGQ. Raj, that's not working. We did Amazon. Amazon, expect it to go on positive. If it opens positive, they're eventually going to take it up to the 200. ARQQ, fry pan bottom. Make sure your volume's good, which I think it is. Owens, Illinois, not a very exciting percentage mover. If you like it, you can be buying it, but this is your resistance level, so it's not a very big percentage mover. It's basically one of your institutional traders. Kind of a bottoming action on lithium or lithium motors. EXPV, you stay long because there's your J-hook plus pattern. Delta. You could buy this one. Again, not a very exciting one because it's an institutional trader, but you definitely could be looking to go long, getting into this gap area, giving a little running start, and then watch your 34 and your 50. Bivy, wouldn't be long or short this one. AMAT. AMAT, you get ready to buy. Notice how they gap this up above the, or at the previous day's open, and then gapped it up again. That's telling you they're starting to come back in. So pretty much want to see if they can get up through this level. But I would suspect if this opens positive tomorrow, which means the market is probably opening positive, you could be buying it. AMGN, tri-pan bottom, now not only got through the 50, but used the 50 as support. Day trading with candlesticks, yes. Remember, candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. I used to trade the E-minis off a 1 minute, 3 minute, 10 minute combination. If I'm trading intraday, soybeans, cattle, the dollar, I'm usually using the 10-minute chart. AutoZone. You can be buying it. With your Morningstar signal right off the 200. Just watch to see if they can get it up to the 50. Occidental, you can stay long. ExxonMobil, stay long. Apache, yep, stay long as it stays above the T line. And the small one, Bohr, whoops, just stay long. And I say stay long. Want to definitely see this open positive and trade positive. This is a good looking chart. There's your double doji breakout. There's gap to fill, there's gap to fill, and then so you're probably heading in an uptrend, not a big percentage mover. Goog, nothing. If you're short, stay short. Bet, nothing. That's as sideways as you can get. Baba's got a breakup value, apparently. Got to discover what everybody thinks it is. So right now, I thought they said they were going to break it up into 6 different companies. Got to find somebody that has analyzed what the value of those 6 different companies are. So stay long. Oracle, just stay long. SLI backed off today, but it's still got this best friend, which should be an influence to say, whoops, this should be in an uptrend. So you still can be buying this one if it comes back up through today's open. Daku, that's a nothing chart. That'd be someplace else. Texas Instruments, stay long. Recognize this signal right here. ADI. Oh, nothing wildly exciting. You could buy this one on strength. TFCV. TFCV. Yep. That one's not coming up. ASML. Another Morningstar signal. J-Hook Plus. You can buy this one on positive trading also. Taiwan Semiconductor. Well, what did I just do? If you're buying this one, you buy it if it comes back up through today's open. SCCO, stay long. Use today's open as your stop. Salesforce, Chicago Merck. Nothing greatly exciting, but it's heading in the right direction. Stay long on this one. What happened? You could buy this one. Just buy it on strength. Other than that, it's nothing real exciting. Now there's your best friend signal. Be ready to buy on positive trading on PALI. IoT, yeah, could be starting wave 3. You can buy this one in strength. Tell us if you would buy for the various stocks you are previewing. I don't know what that means. Palo, nothing wildly exciting, but see when they did the big breakout, they're still in kind of a 45 degrees, so all you do on this one is stay long as it stays above the T line. Bidu, that's a little bit junky. It's having a hard time getting through this area. Makes it easy to trade tomorrow. If you're long, it has to open positive and start trading positive. If it opens lower, close it out. That means it's failed up here at this level. Positive trading, no. Positive trading is a combination of that you want to see it trading above the previous day's close, not necessarily the previous day's high, and it's doing it in conjunction with the overall market's indexes trading relatively positive. You don't want to see the Dow opening up down 140 points. Yeah, you want the right combination. How do you overcome hesitancy to short, for example, and take the signal short? How do you overcome hesitancy to short, for example, and take the signal short? And hey, I must have been drinking too heavily before some of these questions I'm not fully understanding. How do you get ready to go short if it's doing what you think the pattern should be doing? Avis, you could be buying this one. It's doing a rounding bottom, so if it opens positive tomorrow, telling you the 200 is not going to be acting as a resistance, then you kind of figure they're bringing it back up into this area. Ray, what do we got here? Smorgasbord. ADI, you can buy on strength. 5, nothing. I'd be someplace else. First Solar backed off today. If it opens lower tomorrow, you close it out if you're long. Restoration Hardware. That's if you're short, stay short. Boeing, you can stay long on this one. Want to see it break out through this level. And Visa, That's kind of a nothing chart. HIMX, yeah, it's got a good fry pan bottom. You could buy this one on positive trading tomorrow. And GFI, one of the gold stocks, you just stay long until you see a sell signal. Now you've had a gap up doji in the overbought area. I'd just keep a safety stop maybe right there, or somewhere down in here because they're gapping it up. Say on 5 minute, a series of down candles, then a pullback. How can one be properly entering short? To expect to ride the short further down is what I meant, since cannot see past the current bar. What kind of stop to place to exit without losing immense and not yet getting knocked out? And it resumes its downtrend. And say on 5 minute or 2 minute chart during. Well, if you're using a 5 minute chart, you use the same parameters. If this was a 5 minute chart, you use the same parameters. You stay long until you see a sell signal and a close below the T line. If a stock's in a downtrend, you stay short. And if you're trading off the 5 minute chart, you stay short until you see a buy signal and a close back up above the 5 minute T line. That's not anything to really write home about. JK, I'd probably be someplace else. Yeah, there's a lot of times where the stock has already moved, so you wouldn't necessarily be buying it. And then there's other charts where it's just starting to move. You could still be buying it on positive trading. What is the best video to review to scan for potential setups? Have meta stock, but don't care what platform or program the video is for. Just looking to get ahead of the charts to get in. Jerry, if you go to our products and services, we've got probably 40 different videos on everything. The 12 major signals, the high profit patterns, the top rank signals and patterns. There's a ton of them there. They're not that expensive. Johnson & Johnson. Oh, well. That's kind of a nothing chart. I'd be someplace else. And when I say I'd be someplace else, that means there's tons of other charts out there that have much better patterns or price movements to them. Under Armour, yeah, you could buy this one on positive trading. Your uptrend remains in progress. ANET, that one you stay short. Or if you're thinking of going short, comes back down through this level, I tell you there, that little bearish gap down is bringing you back somewhere, and another case where you could put Fibonacci retracements on and see which targets. Okay. Will you tell something about the simple? Yeah, we've already got all our formulas on Metastock. All you have to do is, I think, just a one-time buy of the what do they call it, upgrade. Then every time you see a Metastock chart, it will show you what signals and patterns are setting up, what signals there are, and not only does it point it out, but over to the side it will actually describe what that signal and pattern is doing. When a stock closes as a doji and you are looking to go long, do you wait for a price to go up through the top? No. If they open up positive the next day, remember the doji rule. It's going to move in the direction of how they open after a doji. So now if they gap it up above any of the previous day's trading, the top of that doji, now that becomes a best friend signal. It's even more powerful. Yeah, so now there's a, down in the very right-hand bottom corner, there's a little file down there. That has a lot of the formulas in there for different signals and patterns. Walgreens, yeah, it's not very exciting, but it's probably at least heading for the 50. And CVS, you could buy this one on positive trading again. It's broken that downtrend. All right, everybody, we will be back in the rooms bright and early tomorrow morning. We'll see everybody then.